Hi everyone. We didn't quite get to finish presenting all the information in our session with Tom because we ran out of time. So I've added in a few extra parts here for you to review. Because it's on YouTube, you can use the chapters feature to skip ahead to any section that may interest you or to skip towards the end so that you pass things you may have seen already. With that said, let's get back to the recorded session with Tom.
All right, I want to welcome everybody to a very special event. Thank you, Optionetic students. Thank you, Tom's Trading Room students, for coming along. Rob Roy's with me. Rob, good evening.
Good evening, Tom. Good to
Good
see
to
you.
see you. You're up in the mountains, I see.
Up in the mountains, yeah, getting away from Hurricane Alley there in Florida.
Oh, that's right. That's right. So I thought maybe you were starting the holiday season early.
Uh, well, it is going to stay through the holidays, but yeah, it was just like two hurricanes within a month. That's enough.
Yeah, I
Time
don't
to
know
go
about
somewhere
you.
else.
I'm still cleaning up. I'm still cleaning up my mess over here as it came through Sarasota, and I'm just east of Sarasota. So it really the back wall of the eye hit me, and we had floods. We had a lot of 100-year oaks down, but things are getting very close to back to normal over here. So
Yeah, well, I'm glad
hope
to hear
things
that.
are
Back in my golf
same
pro
for you.
days, I was a golf pro at Venice Golf and Country Club, not too far from you, and I know people that they don't have inhabitable homes anymore.
Wow. Yeah.
Rough over there.
It's been a rough year for Florida, especially down in Fort Myers. So anyway, it's been kind of a rough year in the stock market too, and you know I've been wanting to have you on for months now, and I think this makes a lot of good timing. So I wanted to start off with everybody by welcoming them to the event. Also, I want to let everyone know the event is being recorded. And Rob is going to be showing us something brand new. This is brand new that we've never discussed before. It is called trading the Zig-Zags, trading Zig-Zag waves. And I want to put Rob to the test because I have a couple of things. You know, we'll look at the overall markets. I'm going to throw two stocks at you, Rob. One looks like a seller's dream for as an option trader, and the other one looks like a buyer's dream as what I'm seeing right now. So I thought what I'd do is do an overall market view. I want to show these two stocks. Then I'm going to turn it over to you so you could talk about trading the zigzag markets. And then by the close of the session, if you could just give us your views on these two stocks that I want to share with everybody, as well as what you're doing now with zigzag waves and how people can follow you in the zigzag market. All right, so let me share my screen. Let's do that real quick. And you can see my screen right now. I'm in dark mode. I mean, you know, I remember when the sun used to still be out at 7 o'clock at night here in Florida. It's not sunny Florida anymore. But anyway, so what you're looking at, folks, are year-to-date charts. I want to talk about year-to-date charts with the S&P 500. We're going to look at stocks, bonds, currencies, commodities. What I see right now is the most expensive stock in terms of options implied volatility, that seller's dream I'm looking at. And then I want to look at the cheapest stock out there when you're looking at the most popular stocks. And then Rob's going to give us an idea whether he likes them to the bullish side or the bearish side. All right, so here we go. S&P 500 started out the year at 475, down to 350 just a few weeks ago. Actually, about a month ago, we hit October 15th. And it's very interesting because this is a pattern that I often follow. I don't know if you guys know about this pattern, but I want to throw it out there for you. Not a pattern that I know a lot of people have followed lately, but mid-October seems to be the time in which hedge funds and large specs will take a look at their losers. They'll take a look at their winners too, and they'll start to create tax loss sells. So they'll close up positions that they've lost a lot of money on to help offset their gains. And if they really like the position that much, they'll just buy it back about 31 days later in order to avoid any kind of tax implications here in the States. And so that seemed to have happened when you take a look at what went on with the SPY as we dipped down on the 13th of October. and we opened down around below 350, and here we are now back to 400. And I'm hearing a lot of the mainstream media saying that 4,400 is the next target for the S&P 500 and the stock market itself. What I like to do is I like to take a look, and I like to try to blend some of this in and look at the rest of the landscape to see if that makes any kind of sense. And by the way, folks, I didn't mention this already, but if you have comments, questions, etc., you can put them in the chat. All right, that's straight here on Zoom, and I'm going to type in chat here so that everybody knows what I'm talking about. Feel free to put your comments in and questions, and we'll try to answer as many as we can here during this session. So lower highs, lower lows. I think in order to really break this downtrend, what we've got to start to see, and it looks like it's short term here, is we're now seeing our first higher low, and now we're seeing our first higher high. Now, if this actually pans out, that's great. I do think we need to see another decent sized collapse and then a higher high off of that. That 425 area does look like it was an area that I think needs to be revisited and exceeded. And then I think we're back off to the races again. All right, now you got to think about this. Think about for a moment, when you're looking at this, think about the landscape. All right, what's the Fed doing? Fed's raising rates. Have they stopped yet? I don't think so. All right, but are they going to finally slow down and take their foot off the pedal? I'll let Rob give his thoughts about that. But I believe a lot of it has to do with a couple of things I want to show you. Okay, so this is the stock market. Let's take a look at bonds. So if you take a look at the year-to-date on TLT, within the last couple of weeks too, and you see the low that happened here was a week later after the stock market, we're starting to get a little bit of a rally here in bonds. This basically is telling us that maybe, the short term, maybe interest rates, at least, we may have already baked in perhaps another rate hike, but after that, the bond market's telling us that potentially we may now have a lot of that in the rear view mirror. If that's the case, what's good for bonds is going to be good for the stock market. Looking at UUP, this is an interesting one. This is a one that we want to pay careful attention to, and that's the cash market. And I want you to look at what the cash market did. When we crossed 29.50, and this was back after Labor Day, when we crossed 29.50 to the upside, the last time we saw a number this high, you got to go back to the pandemic. You got to go back to March of 2020, because we have not seen 29.50 since then. We actually ran up to 30.50, did a little bit of a two-step, and what's happened in the last, I want to say 7 to 10 days, is we've seen a massive drop-off that have taken us from 30.50 down to 28.50. You might say that's not much of a drop-off, but if you look at this in percentage terms, you're talking about a 7.5% drop-off off of UUP. And again, as this moves down, that's actually very good for equities, and also the bond market. And one more I want to share with you, and let's take a look at a few of these here. USO is the commodity, the ETF for oil. You take a look at oil. Oil firmed up since about the 26th. So you saw the stock market hit its low mid-October, and then around the 21st, we saw bonds hit their low. The 26th, we saw oil hit its low. And so we're starting to see rebounding in a way that we haven't seen for when you're looking at the entire group for quite some time. Now, oil hit its high back in June when the markets were still selling off. But that's because there was a supply issue. We know there's a supply issue, and we saw the oil market pick up. I think the oil market will rebound, but as a seasonal trader when it comes to oil, I really want to get involved in this after the holiday season. After the holiday season, we get into really Valentine's Day. Then we start to see a seasonality on oil, and oil products pick up. Want to move into another area? Let's move over into UNG, United Natural Gas, probably the most volatile of the fuels. And we've seen, you saw UNG, which was down here at 12.50. It made a run and went above 30, then had a complete, almost a huge pullback that took us back down below 20. And then, wouldn't you know it, a couple months later, we're trading at new highs for the year. But here we are back down around 20 once again. Now, I wanted to share that with you because we're going to look at, this is not this one, but there's an ETF that I'm going to look at here momentarily, which is one of the most expensive ETFs I've seen, and it is in this space. So we'll look at that in just a moment. I got two more. GLD up, not GOD. Let's try that again. So here's GLD. And GLD, with the exception of what's happened just in the last about week and a half, we saw GLD down near 150. And I was long GLD at the beginning of the year. I got out of GLD when we dipped below this area right here, this 170 area. I started to pull back, and I was looking for 150. 150 almost got cut down here. This was November 3rd. So just in the last 8 days, we've gone from 150 to 165. That's a huge increase. And what gold is telling you what a lot of commodities out there are telling you, that perhaps interest rates are finally, or maybe not in the rearview mirror, but very, very close. And you got to remember, the markets are always ahead of the news. Okay. So last one I want to show is, let's take a look at one of these two, is VIX. This is the CBOE Volatility Index. And this for the year has really been caught in an interesting trading range. Every time we've gotten down here at or below 20, it's resulted in pullbacks in the market. We ran up to, once we get into the mid 30s, that became a buying opportunity. We came down in the low 20s. We have not yet gone into that euphoric area where everybody's just happy, kumbaya moment, and then, of course, the market rolls over. I like this. The fact that it's still in the mid 20s tells me that there's maybe some more bullishness that we could squeak out here during the short term. And then finally, let's spend a few minutes looking at some different reports that I have. So one of the reports I like to look at, and I like to look at expensive and cheap applied volatility. There's about a half a dozen reports I look at, but if I were to look at the top two, these are the two I'm looking at. The expensive IV chart. This shows me options with implied volatilities that are very close to 1-year highs. So for instance, if you look at PGR, the high over the last year, when we're just looking at the options premiums themselves, 37, lowest 20, current 37. ATKR 72 is the high, 40.92 is the low, 72.55. So it's on its highs right now. So Cisco just off of its highs. JD just off of its highs. And then you see TJX, Target's on here as well. These are companies that are reporting earnings pretty much right now. And then I come down and I see this one BOIL, which has a high of 209. Implied volatility, low of 191. It's currently at 199, which is very close to its high. And I'm thinking to myself, that 199 on its own is a high implied volatility. Let's take a look at that and look at it a little bit further. So back to my dark charts, and we're going to look at, once again, BOIL. Very, very expensive. And the reason I want to look at it is because this is almost an inverse relationship to options implied volatility. But as you can see, we've gone from 120 on BOIL, and this is an ultra natural gas. So the ultra natural gas has gone from 120 down to below 40. If you've noticed, the last time it was below 40, we didn't even get below 40 in July, but we were below 40 at the beginning of the year. In fact, we were actually below 30 in the month of January. February popped up, but are we starting to see potentially some value creeping in on commodities? Now, if you look at every commodity out there, with maybe even things like coffee, cotton, corn, the ags, they're all pulling back from where they were. All right, and these exchange traded commodities, and this one's got a little more oomph in it, but it does have a lot of implied volatility. So I like the UNG space, and I like I like BOIL for the ability to sell these put options, right? To sell these put options or call options if you're bearish. But selling premium in this area, this space, looks like the right thing to do. All right, now let's take a trip to the very, very cheap stuff, and that's on the right-hand side. And this is, when you look at the Pfizers, the Oxys, BTUs on this list, CCJ, AR, FANG. Now, that's not Facebook, Amazon, Netflix, and Google. That's actually FANG, the oil company. All right. DBX, PBF, and BROS. A lot of this, folks, is in energy, a lot of it. So you're seeing oil and you're seeing refiners and you're seeing distributors all in this area. They're showing very, very cheap options right now. So if you're bullish, then maybe buying time value, buying that premium is the right thing to do. If you're bearish, maybe buying put options if you believe that these are going to cool off from where they are. But taking a look at all of these, Pfizer at the top, that's the cheapest thing that's out there in terms of option premium. What's it look like on a stock? Let's take a quick look. So I want to look at PFE. All right. And so PFE's had a lot of this lower high, lower low scenario, came way down into about the 41s before rebounding, trading just off of 50. In fact, 48.57 was the close today. So as I turn this over to Rob, I want to say hello to Rob, but I also want to put Rob to the test because Rob's going to be showing us something brand new as a contrarian trader. You know, Rob, he's a conspiracy theorist. He can't stand the Fed. You know,
I love the tee up you gave me as far as talking about the Fed, Tom. Appreciate that.
But you know what, Rob? I want you to take a look at Boyle and I want you to take a look at PFE and tell, somewhere tonight. And I want you to tell me what your thoughts are on those, because I like Boyle and that natural gas area as an option seller. And I like PFE Pfizer as an option buyer. And I'm going to have you help us decide what direction, if any, these look like they're going in. So without further ado, Rob Roy.
Sounds good. Thanks, Tom. Appreciate it very much. Mm-hmm. Everybody, thank you for your time. And I'm going to go ahead and take the screen back over here. And as Tom said, I'm going to show you something brand new. Tom often introduces me as the contrarian trader. And I think what we're going to talk about tonight really moves into that kind of a space. It is an Elliott Wave pattern known as a zigzag. We'll go through and talk about all the details. Before we do that, I know you see these all the time. Here's ours, our disclosure disclaimer for Elliott Wave options. Basically, in general, it says we are not licensed to give investment advice in the United States. And then any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. It is important, don't want to make light of it, but you know the deal. Take a screenshot of it, read it in detail at your leisure. As we know, the market moves in a series of impulses and corrections. You've learned that through Elliott Wave, all the Optionetics courses you went through. We're talking about the 5-wave pattern within Elliott Wave, and it's just the fact that the market doesn't move in a straight line is the general gist of it. We have impulse moves and then corrections, and it doesn't matter what direction you're talking about. Normally, when we hear the word correction, as you know, we're thinking of something moving to the downside, but in the world of Elliott Wave, a corrective move is a move against the previous impulse. So if the impulse was to the downside, the correction's actually to the upside. So impulses and corrections, that's the moves that we're talking about. Now note that all of these examples that you're seeing on your screen right now, they're not the 5-wave impulse pattern that you're used to. They're all 3-wave segments. And that's one of the things that I find the most exciting about a zigzag pattern is it's a 3-wave segment rather than 5, which means it happens in a little bit shorter term. So if one of your complaints may have been, well, it takes a long time for a 5-wave impulse pattern to play out. Well, with a 3-wave pattern, it doesn't take anywhere near as long. You can have some satisfaction a lot quicker. As I mentioned, it is one of the Elliott Wave corrective patterns. Not many people talk about the corrective patterns, but they are zigzags, flats, and triangles. Now, the zigzag is directional. And we'll talk about this before I catch flack on YouTube all the time when I talk about zigzags, and I'll tell you why. And I'll also talk about why people need to learn more about zigzags, because based on the comments, perhaps they could go a little deeper in their Elliott Wave education. A flat is a sideways pattern, and then a triangle is a breakout pattern where you're going through consolidation and you're getting ready to make a move. You don't know which direction it's going to go, up or down, but it's going to make some sort of a move. And often the corrective patterns show up when a 5-wave impulse pattern ends. Often they do, but they show up other times as well. And so what we're going to focus on tonight is the 3-wave directional zigzag pattern. So the zigzag pattern looks like this. It's a 3-wave sequence, as I mentioned. And normally it moves against the direction of the larger trend. So that applies really to what Tom talks about, being the contrarian going against the general trend. That's normally what zigzag is viewed as. Normally, we're going to actually add a little twist to that tonight. So we'll talk about how zigzags are normally viewed, but we're also going to talk about something that I think will really get you excited if you like to trade directionally. Now, I know some people only like to trade sideways stuff. I find the sideways stuff boring, but I know there's people out there like that. But if you like to trade directionally and you're looking for something that maybe can give you a directional pattern, and you are a believer in Elliott Wave, and you would like to see something happen a little bit quicker, you're in the right place right now. So the zigzag patterns are labeled A, B, and C. They will subdivide into 5, 3, 5, meaning within the A, B, and C, the subdivisions there. But we're already breaking it down into a three-way, so don't know that we need to get into the subdivisions that much unless you're really short term. So in general terms, it moves against the trend, but what I'm going to show you tonight is how you can trade a zigzag within the trend. And this is the thing that comes up on YouTube when I start talking about trading a zigzag within an impulse move, specifically the wave 3, which I think you're going to find really interesting. And people say a zigzag is a corrective pattern. They're the real Elliott Wave purists. And yeah, but are all waves mono waves? There's corrective moves within impulse moves. There's corrective moves within corrective waves. And what if we find a zigzag pattern within an impulse move, specifically within the wave 3? I think you're already seeing that that could be quite interesting. So if you're not familiar with the terminology I just used, a mono wave is basically when a directional move occurs in a 45-degree angle. So it just goes from point A to point B, or here 0 point to wave 1. And it just not much of a correction within there, just kind of creeping its way up in a 45-degree angle. That's a mono wave. A complex wave is when you have a corrective move within the wave. So you can see we still started at 0. We still finished at 1. But within that move, rather than it just moving straight up in a 45-degree angle, we had a corrective move within there. And that's the zigzag pattern. That ABC is the zigzag within the wave A. So that makes it a complex wave. And I think most of us would agree that very rarely do we have mono waves that last any kind of length of time at all. The zigzags can be bullish or bearish. So you can have a bullish zigzag pattern, ABC to the upside, or you can have an ABC to the downside. So once again, as with Elliott Wave, not playing preference to what direction the market's going. It's just going to analyze which direction the market is going. And then if we can identify these patterns while the market is moving, then we have an opportunity to make, and again, a little bit shorter term trades here than the general 5-wave impulse pattern. So the guidelines for price, and there's 3 different setups for the zigzags, and they all follow within the Fibonacci levels. So the first one, which you'll see why it's the most likely, is when the B wave corrects 38.2%. And that's because that's the first primary fib level. Now, there is a fib level at 23.6%, but if you really get into reading the works of Elliott, he wasn't much of a believer of the 23.6% fib level counting as a correction. He kind of felt like that was just more of a blip within the normal impulse. And that if you're really going to talk about a correction, you want to get to that 38.2% fib level. So that's why we start there on the first zigzag pattern. When the B wave corrects to the 38.2% fib level and bounces, the expectation from here is going to be an extension in the C wave of 61.8%. So not 100% extension, but 61.8. So 38.2% B wave correction, 61.8% C wave. You can see why it's the most likely, because it's the smallest B wave correction and it's the smallest C wave extension. So higher percentage chance that those are going to occur. We can also see a zigzag pattern that the B wave corrects down to 50%. Now, if you get a 50% B wave correction, you're now going to look for a 100% C wave extension. So basically what that means is that the move from B to C is going to be the exact same distance price-wise as that move was from the 0 point to A. So from 0 to A, the B corrects 50% of that, and then the move from B to C is the exact same distance as it was from the 0 point to A. And if you start following along with these, you're going to be blown away with how often this happens. It's mind-boggling, really, how often we go through and see these patterns set up. Now, the third most likely, because this requires a larger B wave correction, but my favorite of all the zigzag patterns is when the B wave corrects down to 61.8%. And the reason I say that is, to me, the 61.8% fib level is the strongest of all fib levels. So you have a nice A wave impulse move here. The B corrects 61.8%, and then you turn and you expect the same 100% extension on the C wave as we did in the second example, where B retraced 50%. So if B retraces 50% or 61.8, you're looking for 100% extension. So when you're looking at these, a question that comes up often is, well, if I'm just going to wait on the ones for the 61.8% correction, because you said those are your favorite, and that B is such a strong corrective move there at the 61.8, aren't we missing a lot of opportunities with the A and B at a 38.2% correction and a 50% correction? Yep, good point. Another point could be, but if I step in here when we have a B wave that corrects at 38.2% and starts to bounce, well, what if it's just a small bounce and it's really going to come down and correct to 50%, or it's really going to come down all the way to 61.8%? If I entered at 38.2, I'm at a decent loss now before the B wave corrects to 61.8%. Both of those are on the opposite, sides of the spectrum there, but they're both very valid questions and concerns. So what do? Well, to me, there's two choices. Number one, you can just wait and look for the B waves that correct 61.8% and have a lot of confidence in those because they have a high percentage of accuracy, that B wave corrective level being so strong at the fib level of 61.8. Or if you wanted to follow along with a pattern of sticking your toes in the water, when you get a 38.2% correction, if you have a X number of dollars that you have allocated to put at risk in any one of your positions, then put a third of the position on. And if it bounces down to 50%, add another third. And if it bounces down to 61.8, add again. It's your dollar cost averaging on the way down. And then you have your position at the 61.8% correction. So that's something that you can do. Or again, you can just say, you know what? I'll let the 38s and the 50s go, and I'm just going to wait, and I'll put on a full position when I see the B wave correct to 61.8%. Either one of those is fine. I know people that do it both ways. The one caveat here on the first one is that even if you only put a smaller position on, if it is only going to be a 38.2% correction, and there's plenty of examples where the B wave only corrects 38.2, obviously, or we wouldn't be showing you here and say it's the most likely with the 61.8% extension, at least you participated in that and you made a gain. It might not have been a full gain on a full position size, but profits are profits. And then you move on to the next potential example. But this is really important here as far as understanding where the B wave correction is going to be. We're not looking to trade the A wave. We're looking to trade once the B wave sets up and it creates its corrective move. A couple things to note here. The 38.2% correction, when you go to the 61.8% correction, it says not likely to be retraced. What that means is that when the C wave completes, when that zigzag completes, that entire move from 0 to C is not likely to get corrected all the way back down to the 0 point. Same thing with the second example with a 50% correction. Normally when these happen, you might get a little correction from there, but the trend is going to continue, is basically what that means. However, when you see this B wave correct down to 61.8% and you get the 100% extension, oftentimes that entire move gets completely retraced. It's almost like you learned with the 5-wave impulse pattern within Elliott Wave that when the wave 5 ends, if the wave 5 hasn't extended 100%, you're going back to the previous 4. Same kind of thing here, that if you had a 61.8% B wave correction, once the C wave extension completes, it's likely that that entire move is going to get retraced. So that's something that you could keep an eye on if you were looking for, okay, well, I made money to the upside here. Now I'll look to make it back to the downside on the corrective move back down. And again, as a emphasis, these are patterns we're showing to the upside, but it works the exact same way if the pattern is moving to the downside. It doesn't make any difference whether it's up or down, just giving you illustrations of the fib levels that we're looking for on those B wave corrections. So as you can see, a zigzag is far more than just a corrective pattern. And it's more than a corrective pattern for a couple of primary reasons. Number one, all impulse waves grow from zigzags. This gives you a unique opportunity to trade the wave 3, which I think is the most important wave to trade because it is the strongest of all Elliott waves. If you have a directional pattern and you're in the strongest of waves, it increases your percentage of the stock moving or continuing to move in that direction. Zigzags also show us that fib extension levels within the impulse waves can give us swing trading opportunities, whether we get a further extension to be likely, or at the end of a zigzag pattern, if it's one of those that's going to retrace, then you've got an idea of, hey, I may flip this and go the other way. So you have a myriad of opportunities when you identify one of these zigzag patterns within an impulse wave. So when a new zigzag forms a bullish correction, and you can see this move here, we had a previous bearish move to the downside, and now we have a bullish corrective move back to the upside with the ABC formation of a zigzag. If the zigzag extends the 161.8% level, this could be a sign of a new impulse forming. So with that said, why don't we go ahead and take a look at our profit source software to see if we can identify some zigzags in the current market. And I think you're going to be pretty interested to see what we find. So I haven't preset anything. This is not going in Monday morning quarterbacking and setting up. This is the current market on the SPY. So what else can you use than what's currently going on to illustrate the power of this? So let's take the Elliott Wave pattern off right now. And then when you see the bars, I think at this point in time, you're already seeing that, hey, I kind of get an idea of what these zigzags look like. So there's a zigzag pattern right there in the first move from, so this case is a bearish move correcting a previous bullish move. So it works either way. Before we said if you had a bullish move correcting a bearish move, so it works vice versa. So here we have this bearish move correcting a previous move to the upside, and with a 42, so that's the 38.2% level, you were looking for a 61.8% extension. We got that. And then we're talking about, can we get extended levels? And we did. We extended all the way down to the 161.8% level there. So that's a move, but notice that's not the end of the move. So when you pull back, look at it again, you can see, there you go, that is a complex wave. That's the first wave, that's the wave A. So now let's take and measure the entire wave A, which we already know was complex, and we look again and we can see that here we have this move down to the 100% level right on the secondary move, so the complex wave A. But then when we take that off, what did we say? If we move to 161.8% on the initial zigzag, you may have an impulse pattern forming. So if we go back and turn the Elliott Wave pattern on, there you go. That was the start of a formation of a 5-wave impulse pattern. Exactly what we just talked about just happened in the U.S. market on the SPY. Now, just to add a little more juice here to really make this pretty interesting, look at this wave 4. We're at a 75% extension. We're getting close to where that would become disqualified. It becomes disqualified if it hits the 78.6% level or if it takes out the low on the wave 1. So let's take that off for now because there's another zigzag pattern right there forming within the wave 4 corrective move back to the upside. Now that shows 100% extension up to 411. If this C wave extends to that 100% level, that will be very close because that's right around where the bottom of that wave 1 is. That'll be very close to disqualifying this 5-wave impulse pattern to the downside. So we're just going to have to kind of wait and see what happens over the next few trading days. Do we make it to the 100% level and disqualify this 5-wave pattern? Does it barely stay alive? We'll see. The software will label it for us and let us know. But when you have things like this, it becomes really interesting to see how things play out. But as you can see, just in the current market, there's zigzag patterns existing everywhere. So hopefully you found that interesting and informative on just exactly what's going on in the market right now. So new impulses begin with a zigzag pattern. You can get extensions up to higher levels. It doesn't guarantee that a full wave 5 impulse pattern is beginning, but you can see that if we're going to be trading the wave 3, we don't even really care if the full 5-wave impulse pattern starts. What we'd like to know is, hey, we've got a good solid long wave 3 to trade, that strongest of all waves. So it works out amazingly well with these zigzags. I hope you're starting to find some interest here. And then we can look if that wave 3 does go to the 161.8% level, will it extend further? Can it go to 261.8 or then even all the way up to the 423 level, which would likely bring us into a wave 4 correction and then the wave 5 extension. And then we have a complete Elliott Wave 5 pattern. So what we're trying to do is give you the illustration of all of this started with a zigzag pattern. And then you have the completion of the full wave 5. If you don't want to trade the wave 4, you can sit that one out. Let that wave 3 trade the zigzags in the wave 3. Let the wave 4 form. As you know, now we have a zigzag in the wave 4, so I don't know if you really want to sit it out because there's trading opportunities there. But if you do, if you're more on the old school side of let's let 1, 2, 3, and 4 form and then trade the wave 5, you can do that as well. But I hope I'm encouraging you to at least consider using the zigzag pattern as an opportunity to trade that wave 3. It just puts more percentages in your favor, in my opinion. So again, it's more than a corrective pattern. It gives you the opportunity to trade the wave 3, and it also shows us extension levels within the wave 3. And the reason that we're highlighting that is that's the one thing that creates the confusion is where is the wave 3 going to end? That's why people are taught not to trade the wave 3 because it's an unknown. I submit to you, if there's a zigzag within the wave 3, now you have a high probability price target to know exactly when that wave 3 is going to end. We have a Zig-Zag Mastery class coming up, which is an in-depth master class exactly on the subject matter that I've just previewed for you in this recording. It's 4 90-minute powerful live sessions where we're going to go through and talk about the following subjects. In session 1, we'll talk about the zigzag trading plan. So we'll give you entry thresholds, what to use as far as confirming indicators. We love the DMI, as you know, as a confirming indicator. And we'll add other pieces to the puzzle there on knowing exactly when to enter. So it's not just a guess. If the close is near the high of the day. And if you are someone that watches the market and can enter towards the end of the day, if you have all of these occurring and it's late in the trading day and you're like, this is going to close here and we're going to close near the high of the day, you can go ahead and put it on during that trading session. But I also want to highlight the fact that if you're not someone that can watch the market intraday or make trading decisions intraday, you can see it the next day too. The end of day chart will show this as well, and putting it in on the next day is fine. So following along with the rules, that would be your entry threshold. Note it's not down here at the wave B. We talked about that before, where you could be a bit more aggressive if you wanted to enter even partial positions at the B wave correction if it hits those particular fib levels. If you'd like to be a bit more conservative, wait until the entry threshold is hit, which follows all these guideline rules. So we're going to cover both aspects there. So whether you consider yourself an aggressive trader or a conservative trader, there'll be entry guidelines for both of you. And I think that's really important because we all have different trading objectives, and some of us are naturally a bit more aggressive than others. And then we look for the rules and guidelines that can show us the opportunity for that C wave to extend further, whether it goes to 61.8 is the end, or 100 or 161.8%. Will give you the guidelines to look for with our confirming indicators on how to find all of those potential targets. So we'll talk about setups on the zigzag pattern within the wave 4. You just saw one in the current market. So as I said, if you want to follow the old school stuff of don't trade until the wave 4 is done, see how many opportunities you've been missing. You've been missing opportunities trading the wave 3 and opportunities trading the wave 4. So we'll go through and give you guidelines on entries of when to utilize the zigzags for trading their wave 4 or just waiting and using the wave 4 as the beginning target for a wave 5. So trading that last wave 5 that so many people have been taught. If you want to do that, we can follow along with those as well. In session 3, trading the wave 5 zigzag setups. So you can see the setup here and what happens when a wave 5 pattern ends. This is just as basic, as core as Elliott Wave gets. When a wave 5 pattern ends, you move into a corrective pattern, and it's going to be a flat zigzag or triangle. And so if you look for wave 5s that end, we'll look for the signals to show, hey, it's likely that that corrective move back to the previous 4 is going to be a zigzag. So this is kind of, again, where you can go trading directionally one way and then trading directionally the other way, because if you've been experienced with Elliott Wave, you know that when a wave 5 ends, there's an extremely high probability you're going back to the wave 4 to the downside. So we can give you target prices utilizing the zigzag pattern to give you ideas of when and where we might go in that wave 5 move back down to the previous 4. And then session 4, we save the juiciest stuff for last, if you will, where we'll talk about how you can actually trade zigzags within the wave 3 and take advantage of the strongest of all Elliott waves. There's debate whether it's the longest. Sometimes the wave 5 can be the longest, but it's always the strongest. And often, because it is the longest wave, again, not always, but when it is the longest wave, there's not only a zigzag in there, but there's likely an extended zigzag, which means you can stay in the pattern longer following along with the confirming indicators that we're going to go through. And that gives you the idea, okay, where will that wave 3 potentially end for the wave 4 to start? So we're taking that caveat out of why people are concerned on trading the wave 3. When will the wave 4 begin? We'll take that out. And so now you have the opportunity to trade wave 3, 4, and 5. We're going to cover all of this stuff in our Zig-Zag Mastery class. As I said, it's a deep dive. You get the Zig-Zag Mastery course, the 4 courses that I just went through and described to you. In addition, we're going to include our Elliott Wave core. Maybe not all of you, or maybe you need a refresher on Elliott Wave, but maybe not all of you are fully engaged with Elliott Wave as I think you should be. So we'll throw in our core education course as well, which is just the core concepts. Remember, the mastery class is what it said. It's a master class on the zigzag corrective pattern. But there's a myriad of concepts, some of the more basic concepts, the core concepts of Elliott Wave, and we're going to talk about the DMI. That is our primary indicator to look to see if we're getting an extended wave within that wave 3. Is it just going to hit the initial target, or because the wave 3 is so strong, could it go to one of those next fib levels? How do we know that? We utilize the DMI, so you're going to have to understand how to utilize the DMI, and we have an entire webinar, an entire masterclass on just the DMI indicators so that you have a really good idea of how to utilize that indicator. So the special for this session with Tom is we're including all the live classes with yours truly. So that's 4 online classes. We're including workbooks. People have really been complimentary on the in-depth workbooks, the manuals that we put in. There's still people that like to read stuff. Everything is not online with everybody. I'm kind of an old school guy too. And when everything is moved into video and stuff, I still like to just read something in a text or a workbook. And so we have the workbooks as guidelines and the text information. We're including the Elliott Wave software, the profit source software for you. That's an amazing gift there. At one time we were selling that for $39.95. But then we include the alerts, and the alerts can be sent out via SMS and text message. So, or excuse me, the alerts can be sent out via SMS and email, or both. Some people prefer one or the other, but you can have both if you'd like. And all of that normally goes for $22.31, over $2,000. And remember, Profit Source at one time sold for $39.95 on its own. So that's already been significantly discounted into this price, on top of the fact that we're including all of this information that goes along with it, the live classes, the workbooks, the text alerts, so that you can see it in action. So not only are we educating you throughout the process, you're going to be able to see it in action. But we're not going to ask you to pay the $22.31. We're offering this very special price for this event only, this Tom's Community Special only, for $719. We've never done that before at Elliott Wave Options. I've known Tom for a very long time. You heard earlier how long we've known each other. Tom even said he's known me for half his life, which is scary that we're getting that old. But we've been together for a very long time, and we like to help each other out when we can. And I feel like this is something that you have not seen before, no matter how in-depth you feel like your Elliott Wave education is in general. I doubt you've seen this information on this one particular pattern that can be utilized in multiple ways and generate amazing gains in a shorter term time frame. That's the best way to put it. So don't miss out on this special $719. You're not going to see this for much longer, and we probably will never offer this again.
You know what, Rob? I'm coming up on knowing you for almost half my life.
Oh, we didn't need to go there, do we? Wow, that's pretty scary.
It is. It is. I know I want you to check out these couple of patterns in real time, but you've got a really cool course coming up. This is the first time we've ever that this has been offered, and I want to make sure that everybody understands what we've got here. In fact, I'm going to put a link in the chat for everybody so you can get an idea of what it is that Rob is doing. So this is the first time we've offered this particular course in trading. It's an intricate part of trading Elliott Wave. It's called Trading Zig-Zags, or Zig-Zag Mastery. And Zig-Zag Mastery it really is. I mean, if I were to kind of sum this up, you've got a lot of stuff here. You've got live classes over, it's a 4-week time period. So you got 4 live classes that you've got going on, when's this going to start? This is starting like really soon, isn't it?
November 23rd is the first course. Yep.
Perfect. So you plan on getting this in before Thanksgiving and wrapping it up before Christmas. And, I want to mention that not only do you have the live seminars, but you've actually put together a really nice detailed coursework book too, so that people can follow along. That's already there. You got specialized online training. And then you've got, someone was asking about ADX and DMI. And so, that is part of the indicators that you use to help really confirm these zigzags, correct?
That is correct. And that when I was talking about when you get to 100% extension and you're wondering if it's going to go to 161.8, the DMI is one of our favorite indicators to help verify that trend is still strong and it's likely to extend. So that's why we include that in the education, because it is an integral part of seeing how far that C wave is going to extend.
Yeah, and then something else that you're doing is you've got some automatic Elliott Wave tools that you're going to include as part of this course too, which is part of the Profit Source software. And so you've created some what you call EWO tools that are specifically for Profit Source, but are really specifically designed for this particular course and this group of people. Is that right?
That's correct. And it makes it easy to identify. I mean, the other corrective patterns as well, but we're focusing on zigzags. So there's a zigzag tool, which I'll actually illustrate here in a couple minutes. And it makes it simple.
And this isn't for everybody. This isn't something everybody can get. This is just for graduates, right? The folks Correct. That are attending your course. You got real-time exits. Correct. You got real-time alerts, exits, and entries. You got them both on text message or email, and then it just kind of goes on and on and on. It shows exactly what you're doing: the zigzag pattern, the setups, wave 5 setups, zigzags in wave 3. You've got a whole lot of frequently asked questions on here that you've put in as part of the Q&A, part of Zig-Zag Mastery. but you've got this thing going at, this is a great price, $719. This is fantastic. I put a link in the chat box for everybody, and I'm going to do it again so you know it's me. I'll do it twice as nice here. That is me that's hitting that chat box right now. So down at the bottom of my chat is a little blue link. If you click on that, you're going to open up the exact same thing you see here. Again, one-time fee, $719, and you get all of this. So this is a really great way to end the year, Rob, and I think it's a perfect time to start talking about this.
I think so too, and I do think that, I 100% agree with what you said in the very beginning as far as the market. I don't see it going significantly up or significantly down. I think it's going to be chopping a lot, and so these three-wave zigzag patterns I think are going to be a great way to trade. So you get a short-term directional move either direction, probably both directions, numerous times. And you're right on it's normally $2,400 for everything total. So it's a fantastic price. And we have never done this before. This exact package that's put together here, we've never done this before. So this is
great. Okay. So now I'm excited. I want you to open up your software and I want you to go to work.
All right. All right, let's take a look. We'll go ahead and I'll take the screen back from you and we'll look and we'll show some patterns here. And I think people are going to be really interested. So I didn't want to pre-can anything, preset anything. Here's the market. Here's where we are right now. And you can see that we have this 5-wave impulse pattern that's very close to being disqualified here on the wave 4. And so that's going to be interesting. So let me take the Elliott Wave pattern off for a second. And just from what we've just seen, see if people can notice. And here's an example of this zigzag tool. This is what's really cool about it. So it measures the A, gives you the B. And so when you look at the 41, presents us 38.2, you're supposed to go down to 61.8. And look what happened. It went all the way down to 161.8. So what did we say was going to happen if you had a zigzag pattern that starts, right? All impulse patterns start with a zigzag. And if it goes to 161.8, what does that mean? It's the start of an impulse move, right? So we take that off, put the Elliott Wave pattern on, boom, back there it goes. And if we were to walk it back in time, you can see that back there, it wasn't in the impulse pattern. So it's just amazing with what we've talked about. And then, so that zigzag pattern is within the A wave, and here is another zigzag. So that's a 50% correction. That's supposed to go to 100%, which it did. We did have this blip down here that you commented on in the beginning, but you can see how long we traded through this 100% extension before we started moving back to the upside. And then we take that one off, and again, just take this off for right now, but it's in the wave 4, right? So remember that we're currently in the wave 4, so that's a corrective wave. And look what we have here. We have another zigzag where we had a doji right there at 50%. And so what that's saying is that if we extend the C wave to 100%, which is supposed to with a 50% B wave correction, the market itself should go up to around 411. Now, if it goes up to 411, that's going to be right at the bottom of the wave 1. And if you know about the 5-wave impulse rules, that will disqualify this 5-wave impulse pattern to the downside, which means we are likely not to make new lows if that happens. So if the market goes to 411, that'll tell you that, number one, this C wave extended exactly where it was supposed to, and that disqualifies this 5-wave pattern. And it likely means that the bottom is in, whether you think it is or not, at least for now, it looks like the bottom would be in. So I want to go quickly through because I know everybody's been with us for a while here, the 2 stocks that you told me to look at. And living over here on the Space Coast, the opposite coast of where Tom is, our subscribers are used to hearing me talk about this, and we just kind of label this because I live on the Space Coast, the launch pad effect. When you have something that goes really sideways like this, the likelihood is that you're going to get kind of a blast off move. So you see this, and our subscribers even say, oh, it's a launch pad. So you see that move to the upside there. And so when you're talking about these options being expensive, Tom, and there is a small percentage of the time when the blast off move is to the downside, but what normally happens out of this is that you get a strong directional move, and far more often than not, it's to the upside. So I like your idea of selling puts here, 100% like that idea. I think that's the place to be. And in that, having expensive options and the opportunity to sell puts. Why are they expensive when it's been going sideways? Something is being priced in, right? There's something that they're sensing is going to happen. And I think that's going to be an explosive move. Is it going to be up or down? I think the likelihood is, at least based on this pattern from what I've seen, it's going to be the upside. So that's not a zigzag pattern, but just adding my commentary there and 100% agreement with you on taking advantage of those expensive options. Now, when we look at Pfizer and you're wanting to be a buyer of options here, well, when we look at this, there is a zigzag pattern here. So you see this move here, and so call that the 38% extension. We would look for Pfizer, not a big move to the upside, but at least up to the 50.5 area there would be a potential move there to satisfy this zigzag move to the upside. Again, I know it's not a lot, but Pfizer is not the greatest mover in the world, so that's not a bad move there. So I think as far as buying of options, it looks like that one wants to go higher as well. So those are my thoughts on the two stocks you asked me to look at, Tom.
Yeah, I'm looking at Boyle right now, and like I said, the options are just off the charts. And so if I go back and I'm just, you don't have to follow me along. I'm just gonna mention this, but you go back and you look at what that's done in the last 300 days, and you're really looking at some really good resistance between the $25 and $30 area. And so, for me, I want to go and I want to look and see what are those options going for. They're in that area. The 28 puts, just to give you an idea, the 28 puts are about 15. They're 15% of the stock price for December. We're talking about something that's expiring in 1 month, and you can get that 15% of that move. That's incredible. You could actually go in even lower, get you down to 25, still get some really good. Some good premium. We're talking about IVs that are above 200, which is insane. So you're right, Rob. Something's about to happen, and it could be a blast off to the upside. So take that for what it's worth. And if Rob is right on Pfizer, then even buying something that's slightly in the money on the call side and using an example of maybe the December or even the January options might make a lot of sense. Now, Rob, the reason why I asked you this is because your zigzag, which is part of your impulse method, a lot of people don't notice about you. You have been trading this for about 4.5 years, coming on 5 years now. Coming on 5 years, you've got a performance record, which is, I gotta say, this is good, 83.3%. You've probably taken about almost 175 trades, and you've got a cumulative return of coming up to 750% on impulse waves, and that's what zigzags are. Is they're the beginning of an impulse wave. So I think that's fantastic. That's why I wanted to talk to people that are interested in learning more. They're learning from somebody that isn't just teaching this; he's doing it. He's got the performance that backs it up. And if you want to learn more about this, guys, this is the time. This is the time to do this. We do these about once a year as part of our Tom's Trading Room curriculum, and we're excited to have Rob here finishing out the year with Zig-Zag Mastery and doing it for the lowest possible price that we could ever offer. So if you're interested in this, once again, I'm going to put the link on the screen for everybody. There you go. Want to learn, like I said, want to learn more. It's a 4-week course. All the courses are recorded, correct, Rob? And then what do you get? Do you get the recordings out to people, or do you give them a link to a special site to get the recordings?
Well, they're going to have access as part of the package. They're going to have access to the Impulse program, so they'll be able to view it in the education area on the site, and they can watch it as many times as they want. So they'll have access to it right there.
Awesome.
We don't need to
live classes.
Just go click right on the site and look at it.
Awesome. Live classes, recordings, course workbook, online trading, automatic Elliott Wave tools so that you can follow along and learn how to do it yourself, because this is teachable. This is absolutely teachable, guys. And then much more with the real-time alerts, entries, exits, so you can follow along with Rob at the lowest price that was ever been offered. Take a look at it. I know there's a limited time offer on this because it's going back up to the $2,400 thing real soon. But they wanted to put something together for our group, so I wanted to push that out there to you guys. It's up to you whether you want to learn to trade the contrarian style trading, which has been working this year, despite a lot of other stuff that hasn't been working. I think what's been working this year, Rob, has been if you've been trend trading to the downside, and we have. And if you've been zigzag trading to the downside, and you have, other than that, there's not a whole lot of other stuff that's been working that you're getting ahead of the crowd, getting in before the crowd, getting out before the crowd. I love that particular strategy, and Zig-Zag really does that, especially if you're hopping into the beginning of the three wave, which is the longest and strongest wave there is.
That's 100% right. And if you follow with just the extensions that we talk about, you are out. Sometimes you might miss a little bit of the move, but you're out before the corrective move starts. So you're in early and you're out early, basically. And so you catch your piece. And we always talk about that, right? You don't try to get in at the bottom and out at the top. You look to take your piece in the middle. And this is a great way to do it, especially with just three waves. And people that may think that Elliott Wave is complicated or whatever, this is a simple way that we can really teach this. As you said, it's extremely teachable, even for people that don't consider themselves to be Elliott Wave experts, or maybe people that have poo-pooed Elliott Wave in the past and haven't really felt like it was that accurate for them. Wait till they see this. I encourage everybody at least attend the course, see what you think there, because with what the fee is less than we normally charge just for a course, and they're getting all the extras there with the alerts, access to the education area, the recordings, everything else that's in there. But the course material, I think it will really be eye-opening. I honestly believe that.
Yeah, I do too. I do too, because I've seen what you've done, and it is first class. Denise is asking, are we going to add the zigzag pattern to the TTR searcher? Denise, I've got something even better for you. We've got a surprise that we're going to be talking about next month. So just hang on to your hat. I think you're going to love this. But right now, the only place to get the zigzag searcher is through Rob. That's for Rob's students. That's not even available on Profit Source unless you're part of the Zig-Zag Mastery course. So Rob holds that just for the students, because it's kind of like to me, I take it as like a Ferrari. If you look at the steering wheel of a Ferrari, it's got a lot of buttons on it. And if you've never sat in one of those race cars before, you have no idea what those buttons do. So you need to be trained on those buttons, and then you're able to use them automatically. So that's why Zig-Zag Mastery, like all of our mastery courses, come with proprietary scans just for the members. All right, Rob?
Absolutely. And not to undersell
this is awesome.
the value of the workbooks either. People have really liked the quality of the workbook materials that come along with it. They're just not willy-nilly put together. We put time and effort into those as well, that they get forever as well. So
yeah. Absolutely. And I believe I'm looking at some of the questions coming in. Can Profit Source be used for day trading? Absolutely, it can. I'm not a day trader, Rob. I don't know if you are or not. I've done some time-based stuff with day trading, but I just find my sandbox is position trading. My sandbox is weekly to monthly, give or take.
Yeah, you absolutely can day trade with it if you'd like to. I look at the futures throughout the day in a 3-minute chart, and these zigzag patterns that we're going to be talking about, if you're someone that likes faster moving stuff like futures or currencies or whatever, the zigzag patterns are everywhere in those markets. And I do find myself from time to time, it's not a big part of my trading at all. I'm more along the lines of you, but have I seen just a great setup and zigzag pattern in there and taking advantage of it? I have hit or miss from there here or there, but it's, if somebody really wanted to focus on it, they absolutely could. And it just, after you go through the course, pull up a futures chart, watch the market throughout the day, or a live chart throughout the day, put whatever time frame that you want on there, and watch how the patterns develop. It's going to blow people away.
Yeah, so there's your statistics on your impulse and zigzag waves, and folks, once again, if you're interested in this Zig-Zag Mastery, it's available right now. This is only going to be available for a few days at this price. Afterwards, it goes back to its regular price. You can complete order details below just by clicking on the link that I gave you in the chat box. We will be sending along with the recording for those of you that came in late. We'll have a full recording going out to you probably sometime early tomorrow. And of course, this link will come along with it, but it is a limited time offer. So if you're at all interested in this, then sign up as soon as possible. All right. Hey, Rob, thanks a lot for popping in. I appreciate it. And we'll be seeing a lot more of you very, very soon.
Thanks, Tom. It's great to see you. Thanks for inviting me, and look forward to seeing everybody in the course on November 23rd.
Awesome. All right. We'll see you all very, very soon. Have a great night. And like I said before, we'll get all this information emailed over to you, including a copy of tonight's presentation. Thanks, everyone.
Take care, everybody. Thank you.